This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on TV, radio, YouTube, Bloomberg Originals. Carol Massar, Tim Stenivek is off this weekend. In the house is none other than Matt Miller.
So happy to be here.
Are you?
Yes, I really am.
It's a long day for you.
Well, I mean, I spend this part of my day typically listening to you and Tim.
You do.
And so I'm always happy to be here.
You message in a lot, so it's really fun to have you here. We're going to talk a little bit about the trade today because we've got equity investors back, Matt. It looks like some fairly broad-based buying, although we're just turning off our best levels of the session. I don't know whether it's just people expect that Fed rate cut sooner rather than later. What are you looking at?
Well, I was looking at the gains. So we're up 1.3%, and we were off 2% on Friday. So we still haven't made back what we lost on that day.
No, it's a really good point. All right, so we're going to talk a little bit about technology. We've got Apple's pep talk on AI. We're going to check in with Mark Gurman in just a moment. Palantir coming in with their earnings results after the closing bell. The stock has been on a tear. It's minting Billionaire, so we're going to get into that a little bit later on. And then I mentioned we have a couple of C-suite execs.
Yeah, we're going to talk about how much they're using AI, their clients using AI, and we also have an interview with we'll replay an interview that Ed Ludlow did with the CEO of Joby after their acquisition of Blade.
Copter ride sharing. Generac CEO is going to be with us too as well. First up, though, let's get a check on that trading day. Let's turn things over to Charlie Bell.
Hi, thank you very much indeed. We are seeing stock surge. We are holding, as you mentioned, very close to session highs right now with the Dow, the S&P, NASDAQ. They are all advancing back to work Monday. Right to the numbers here. We have got the Dow Jones Industrial Average up 485 points. That is a gain there of just about 1.1%. S&P 500 index climbing now by 1.3%, while the NASDAQ Composite Index also pushing higher. Your 10-year right now, 4.20%, with a 2-year, 3.68%. So bottom line here, the Dow, the S&P, NASDAQ all advancing. Spot gold up 0.3%. We've got West Texas Intermediate crude down 1.6%. And Bitcoin right now is advancing by about 0.7%. American Eagle Outfitters shares are surging after President Trump touted the retailer's advertising campaign featuring actress Sydney Sweeney. It was the topic everybody talking about over the weekend. Shares of American Eagle right now up by 22.4%. The Post, which initially misspelled Sweeney's first name, was subsequently removed from Trump's Truth Social feed. Again, though, American Eagle right now up by 22.4%. So the Dow, the S&P, and NASDAQ all surging. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. And there will definitely be some Sweeney talk later.
She has really good genes.
And what's wrong with saying that?
No.
I don't know.
Nothing wrong with that.
I don't know. We're going to talk about it with our TV colleagues. Hey, right now we want to talk about Apple. Shares bouncing around today, up as much as 2.7%. Right now near their lows of the session, down about, still up about 0.7%. This is as analysts have been raising their price targets on the company, some 17 changing price targets, 15 raising them by an average of 4.5% following their recent earnings. We also heard about Tim Cook's AI pep talk, and there are also some concerns, which may be what's weighing on the stock a little bit today, about U.S. tariffs on India and what that may mean for Apple products. So let's get to it. Let's lay it all out. Our in-house expert is none other than Mark Gurman. He's Bloomberg News managing editor for global consumer tech, and he's out there in our LA bureau. Hey, Mark, good to have you here with Matt and me. Lots to talk about. First of all, what do we need to know? Is there real concerns about these U.S. tariffs in India and the impact it could have on Apple? What do we need to know here?
I think long-term, yes, to a certain extent. For the time being, Apple's still in a phase right now where smartphones and other types of consumer gadgets are getting an exemption, no matter where those products are being imported into the U.S. from. So Apple at this point is not going to have to pay those additional tariffs. No matter how high they go, we're still in exemption territory. But at some point, that smartphone exemption is going to run out. I believe it's in a couple months from now. And at that point, Apple will need to begin paying tariffs. That's not going to have an impact in all likelihood on the September quarter, but more likely on the December holiday quarter. And they have some padding in there anyways, given that's typically their most revenue-rich quarter of the year because all the new products really come out during that period. What I will note is we're in for basically a yo-yo game here. Apple's going to have to be moving things around dependent on where the tariffs are going to hit. They were very quickly able to move the majority of US iPhone production out of China into India. They'll again probably have to shift it around depending on where they're going to get the biggest savings. But at the same time, I do believe that the behind-the-scenes discussions between Tim Cook, the CEO of Apple, and President Trump will continue to try to get as many exemptions for as long as possible on the company's products.
Well, and President Trump has been pretty open in stating that he wants smartphones to be made in America. How much production of the iPhone do you expect to be moved to the States?
None. I mean, they'll certainly make more components. They'll certainly claim they're doing some sort of manufacturing here, maybe small items, maybe things like packaging, maybe the final component manufacturing here. But in terms of the large-scale mass manufacturing that you see happening in China and India, at this point, that's simply not replicable in the United States. Even if Apple were to claim that they can do it in the United States on a logical level, I wouldn't anticipate that being able to happen at any mainstream quantity as long as Trump is president, if his term runs out in the beginning of 2029.
All right, I want to switch gears because you've got some great stuff, Mark, on the Bloomberg and at Bloomberg.com, your Power On newsletter. You talk about Tim Cook talking to his staff and really giving them an AI pep talk. What did you learn? What are you hearing?
So Tim Cook held a rare company-wide meeting. This is for all employees in Cupertino. The fact is earnings was a huge beat. Tim Cook wanted to come out and celebrate. Hardly anyone was anticipating 10% annual growth. I don't think that's a long-term thing. I think it's a short-lived thing because of people wanting to buy the phones before anticipated price increases. You saw a lot of people coming on TV and lying that the phones are going to go up to $3,000 or $25,000. People got scared. They ran to the stores and they bought them. Who wants to pay $3,000 for a phone anyways? That's why you saw that 10% hike. He focused on a lot of things, but my big takeaway was artificial intelligence, talking about how this is something Apple needs to be a major player in. They need to grab it. They need to own it. They need to innovate. They need to invest in. My big take from that is this was a pep talk that Tim Cook should have given 3 years ago, right? We're at the end of 2025 here. The ship has sailed on AI, and Apple is not going to be able to make a meaningful impact at this point unless they make a major acquisition or a significant partnership.
Well, don't you expect them to do one of those two things? I mean, there's so much talk about, well, I guess I read Dan Ives' notes all the time. So at least he talks about Perplexity a lot and the fact that he thinks they should buy them. And they have made partnerships, most notably with OpenAI, right? Mm-hmm.
I think what Dan Ives is writing about was my story from 2 months ago saying that Apple's having serious internal discussions about buying Perplexity. And then he put his note out multiple months after that, agreeing with my take on there. So that's what you're seeing there. But Apple is contemplating Perplexity, depending on what you see with the Google search deal. Also serious contemplation around Mistral, which is a pretty popular and famous maker of large language models and other underlying AI tech out of France. There's all sorts of complication there with the European Union and the difficulties of an American company buying a French company, especially with the Digital Markets Act and all the policies happening in that region of the world right now. But I do anticipate Apple to make a series of AI-related acquisitions. I wouldn't believe there would be anything north of 10, 15 billion. There's no Anthropic here for 60, 80 billion or anything like that. Certainly OpenAI is a pipe dream of the Apple faithful, but I anticipate them to make some maneuvers there. In that meeting, Tim Cook indicated that 40% of the new 12,000 hires that Apple has done over the past year were R&D. They're shifting around some teams within the software engineering organization to focus more predominantly on AI. So they are making the maneuvers. It's just too little too late, if you ask me.
Well, and let me just ask you, the AKI team, what do we need to know about that? And are they now in on a chatbot or a ChatGPT-like, vehicle for Apple? Because it sounds like they've gone back and forth here.
Yeah, so AKI is this new Answers, Knowledge, and Information group. The person, Robbie Walker, who was in charge of Siri was removed from him because of all the delays and multiple issues. I don't have to go through unless you have an hour, I don't have to go through the laundry list of problems with Siri, but that was taken away from him. Now he's building a new answer engine, and this is designed to be an AI-ification of search. Again, this is all prep work for the anticipated breakup of the Apple and Google search deal. Apple's going to lose billions a year on this. They need a replacement. This is a good time for a reset.
All right, good stuff. Are you okay? Are you hoarse? Were you at a concert or something? Did I miss?
I lost my voice. Okay. I'm all good.
At Lollapalooza. Were you at the Dead show? No, he's in LA, not in San Francisco.
As long as you're okay. All right, Mark Gurman, thank you so much. Bloomberg News Managing Editor for Global Consumer Tech out there on the West Coast. Hey, we're going to stay with big tech, and we're going to talk a little bit about Palantir. Stock's up about 4%, Matt, here ahead of earnings. I don't know if you've looked
And it's
lately.
been on a tear.
Unbelievable.
Over 100%. It's more than doubled this year,
yeah,
let's say.
It's pretty amazing. All right, and we're going to get an update on the business after the close. Let's see what two members of our team have to say about it. Bloomberg Intelligence Global Head of Technology, Mandeep Singh, is here in our Bloomberg's New York studio. And then we should remind that run-up in the share price has created a lot of wealth creation for folks. So we're going to get to that aspect of the story with our Dylan Sloan. He's Bloomberg News wealth reporter. Mandeep, I want to start with you. I mean, it does just seem like this one, every time we talk about it, it's often in a positive way. What are you watching out for when this company reports?
I mean, the U.S. commercial segment revenue, that is the one which has seen the most traction, given they've launched this product called AIP, which is tied to AI and use of large language models. And that segment has grown almost 70% so far this year. Everyone is expecting growth to accelerate sequentially. So anything below 75% growth would certainly be considered a miss. The whisper number is probably higher.
Below 70%.
Yes, but that's, again, a pocket of their revenues. They have a high exposure to government revenue. And look, when a company trades at 90 to 100 times sales, 9 out of 10 times, no matter what the company does, a year from now or 2 years from now, the stock will be flat. And we have numerous examples of that, Snowflake being the most notable one, which is a comparable company to Palantir. It IPO'd exactly at 100 to 120 times sales. The stock has been flat since the IPO. The company has done very well. It's grown 30, 40%. But again, the expectations get so high. And look, to my mind, OpenAI is the fastest growing company, OpenAI, Anthropic. Even those companies don't trade at 90 to 100 times sales. So what makes you think of Palantir at 40% growth, even if it's 45% going forward, should command a 90 to 100 times sales multiple?
And that's why it's created so many billionaires, right? Dylan, there are now 5, I think, billionaires who are mostly co-founders of Palantir, but one, Shyam Shankar, is the chief technology officer. So it's making a lot of people a lot of money. Exactly, yes. So we've been tracking this at the Bloomberg Billionaires Index for about a year now. And you mentioned up 100%, I think, in the past few months. But yeah, the stock's up, almost 6-fold or so over the past 12 months. And in particular, Shyam Shankar, Chief Technology Officer, valued his net worth for the first time. He's at $1.3 billion. And he's another example of a non-founding team member at one of these companies who has achieved $1 billion net worth, which is something that we are seeing more and more recently. In the past few months, we've looked at Sundar Pichai over at Alphabet. We've looked at a number of board members and executives at NVIDIA who have joined that club too. So certainly a ton of wealth creation at Palantir up in the C-suite.
Well, and you also, it's not just, billionaires being created, but just investors in general. And you guys include that it's the third highest highest volume of net retail purchases for any stock, Palantir. So you see retail investors also buying in.
Exactly. Yeah. Really top to bottom. And in particular, it's interesting, looking at the senior leadership. Sankar himself is at, just over $1 billion, but some of the founders are significantly more wealthy as well. We're looking at Alex Karp, who's the CEO of the company, who, he joined the Bloomberg Billionaires Index a few months ago and is now, in the top 200 in the world. So it's really creating some serious.
Makes me want to watch and see if insiders are selling. I mean, Mandeep, when you see the enthusiasm, as you put out, you look at the fundamentals, you talk about price to sales, and it just kind of doesn't make sense. So any disappointment, would you anticipate? I mean, it's not like short interest is high on this one either. I mean, investors seem to be all in.
Well, the investor base is quite interesting. In the case of Palantir, there is a big retail investor base that really loves this company. And look, software businesses are very sticky. So all their companies that are using the product, the U.S. Army, $10 billion contract with Palantir. Now, there is no finite contract duration. It's not as if the 10 billion will show up in revenue over the next 5 years. It could go beyond, but still it's a very sticky business. So that's why software business models are so good. At the same time, it is a very expensive product. So if you're an enterprise spending $40 to $50 million on Palantir, your other option is to go on Microsoft Azure, use OpenAI and Anthropic and build it yourself for maybe less than 20 billion. So a company that is technical enough to do it on their own probably won't go for the expensive Palantir option. But still, if you're a non-tech company, Palantir gives you a very good choice in terms of a product that kind of hits the ground running out of the box. It gives you the functionality you're looking for. It makes sense of the data. So you may be willing to pay a premium price for it. You
might also be willing to pay a premium price if you've got connections to this company through the government, through the military, through the Department of Defense, right? Sankar joined the U.S. Army Reserve's Innovation Corps. So they're getting pretty cozy with the U.S. military.
Yeah, and that's a big endorsement, right? So if the U.S. military is endorsing your product, I mean, it helps you sell to large enterprises because everyone knows their product is good enough to be used by the US military. So look, there are positives and negatives. My only kind of focus right now is the valuation. And I know historically, when things trade at this multiple, it doesn't end well, no matter how good the fundamentals are.
I want to come back to the CTO in just a moment, but we did see the stock take a bit of a hit last week. The information reported that the U.S. Department of Defense has been testing AI models from Microsoft and OpenAI. Yeah. So there is exposure where some of the enthusiasm, the guarantee of government contracts may not always be there.
Well, and also, you have to look at the competition. Now that everything is being reimagined in the world of large language models, Palantir is not a company that is native AI. They found a good pivot with AIP and they've been able to sell better. But there are a lot of native companies that are building on AI-based frameworks. And that's why I compare to OpenAI and Anthropic. I mean, these are some of the fastest growing companies. Even they are not trading at that valuation. So I go back to valuation because to me, there's nothing wrong with how good Palantir is doing. It's just the expectations are so high that they may not be able to satisfy them all.
Did you ever type GPTR on a given security?
I don't know that I did. Why?
You've done it, right, Dylan?
Absolutely.
Because you said you want to see if there's insider buying or selling. And I thought, the Bloomberg could show you that. If you do it with Palantir, you can see maximum shares sold or bought in a single transaction. They include Shyam Shankar, Peter Thiel, and $4 billion of stock was sold last year.
Yes, just last year alone, which was a really big year for insider selling. As we were covering that, it's interesting, the timing wasn't really great, to be honest. We were looking at doing some math on if these executives and board members had held on, they would be they're worth a lot more these days. But Sankar himself, personally, last year, he had been a long-term holder. He joined the company way back in 2006. They're just their 13th employee, so he's really been there a long time and held on to most of his equity, but last year, he sold, I think, around $370 million in one transaction in December. So he started unloading some of his holdings. And why wouldn't you?
And we know execs do this. Sometimes it's just part of managing their portfolio.
Yeah.
I know.
Well, sometimes you need a Rolls Royce.
Sometimes you need a Rolls Royce.
Yachts can get expensive.
Matt's here, everybody. Mandeep Singh, thank you so much, along with Bloomberg's Dylan Sloan. When we come back, we're talking with the CEO of Insight Enterprises.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're holding close to session highs, off session highs, but still gains on this back to work Monday. A renewed wave of dip buying lifting stocks. Right now, the S&P 500 index up 81. That is a gain for the S&P of 1.3%. The S&P at 63.19. We've got the Dow up 493 points, now up by 1.1%. NASDAQ up 1.8%. The 10-year, 4.20%. The 2-year, 3.68%. Spot gold up 0.4% right now, up $13 the ounce, $33.76. And West Texas Intermediate crude oil slumping 1.2%, $68.80 for a barrel of WTI. Bitcoin up 0.8%. Bitcoin just above $115,000. Spotify shares surging after the company announced it is raising premium subscription prices across many markets outside of the United States. Spotify up right now by 6.1%. And Amazon says it is closing its Wondery podcast studio and will break up the audio services operations as part of a broad reorganization of its business. Amazon down by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Matt, I know you like to read in over the weekend, and there was a Bloomberg News story that broke over the weekend. Did you know about this?
The Joby story that Ed Ludlow put out?
Yes.
Yeah, I saw that.
Okay.
For one thing, because I'm kind of into these air taxi companies. So Joby is a plane taxi, right? Yeah. But Blade, which has really cool marketing, is a helicopter taxi. So I thought it was kind of cool that they did a combo.
Have you done this yet?
I have not ridden on either one of them. It's very expensive, so I drive cars and take ferry boats, but someday.
TBD. Well, as we mentioned, we did get the confirmation, something that Bloomberg News did report over the weekend. Joby Aviation planning to buy the helicopter rideshare business of Blade Air Mobility for as much as $125 million in stock or cash as the electric aviation pioneer seeks to expand its battery-powered air taxis into a ready-made market for its aircraft. Shares of Joby soaring on the news. Bloomberg Tech co-host Ed Ludlow and Caroline Hyde, the two hosts of that broadcast, caught up with JoBen Bevert. He is Joby's CEO, earlier on Bloomberg TV.
The first piece is that we're seeing unprecedented levels of regulatory support from the White House, from the DOT, from the FAA, really leaning in. You also have regulators around the world so excited about this new age of aviation. Second is where the Joby team is. We've been knocking out of the park on certification and really delivering on manufacturing, where we're doubling our manufacturing rate. And all of this sets the stage for commercialization.
Of eVTOL.
Exactly. And the key piece is the work that Blade has done, where they've built out an incredible network of takeoff and landing locations, exclusive lounges, and an attention to detail and attention to customer service that are really unparalleled in vertical aviation. And so this is the right moment for us to partner, and both by acquiring the passenger business, but also partnering on the medical business.
JoBen, when we broke this story over the weekend, and thank you for your time and coming on the show, the question I kept asking myself was, does this accelerate the eVTOL bit to market in the United States?
Absolutely. And one of the things that's so exciting, as I mentioned, on the regulatory support that we're seeing from the administration with the recent executive order, we really see the potential where that pulls forward the timeline. And that's one of the big catalysts for why we decided to pull the trigger here on the Blade acquisition.
In the interim, will you continue operating the helicopter rideshare bit? Does that business continue, or you just buy the assets and start planning from there?
Absolutely. We're looking to not only operate it, but to grow it and turn it into a much bigger business. And then we think that with the quiet aircraft that we're building, that we're going to see an explosion in the number of takeoff and landing locations that we can operate from. We're seeing real estate developers both here in the US and around the world who are so excited about our technology and are clamoring for takeoff and landing locations at their developments. And so we just see unprecedented momentum in the market today.
All right, that again is JoeBen Bevirt, Joby CEO, talking earlier with the co-hosts of Bloomberg Technology on Bloomberg TV, Ed Ludlow and Caroline Hyde. Check out the full conversation on the Bloomberg and at Bloomberg.com. We're going to stay with technology, Matt and myself. The tech solutions provider, we're talking about Insight Enterprises, reported earnings last week. Shares did come under pressure, down as much as 18% intraday, the largest intraday drop since 2009 after second quarter sales missed analyst estimates. The stock is down more than 20% year to date. We wanted to hear more about the business, the outlook, and what is going on with IT spending more broadly. Here with us is Insight Enterprises President and CEO Joyce Mullen, joining us from Chicago. Joyce, welcome to Businessweek Daily. Before we get into the results, the outlook, just remind our audience about what your company does specifically and who your customer base is.
Yeah, sure. And thanks very much for having us today. Thanks for having me. Insight Enterprises has been serving enterprise customers, small and medium business customers, public sector customers for 35 years or so. And we have evolved many, many different times. We announced a couple of years ago that we were creating a new category in our industry. We're calling it Solutions Integrator because we have invested not only in our hardware, in our software capabilities and skills with our partners from around the world, but also our services expertise. And what we know is that buying patterns are changing. Enterprises really are looking for results. And the way you deliver results with technology, now more than ever with AI, is by combining hardware, software, and services. So that's what we do, and we're proud to do it. And yeah, we delivered a pretty resilient quarter in a Q2, considering all the headwinds. We met our expectations and expanded profit, but yep, the market dropped for sure, our stock dropped for sure. And we're proud of the quarter we delivered. We just got to keep doing it, and it'll come back.
So why do you think the stock dropped so drastically?
Yeah, we're trying to figure that out. But, I think what we got to do is stay focused on delivering really strong results, expanding our margins like we've been doing, and then also making sure we take really good care of our customers. And our clients today are really focused on how do I put technology to work to deliver results fast, pragmatically, and simply. And this is what we've been focused on for a long time. We're pretty proud of the margin expansion that we saw in the quarter. We're really excited that Gartner named us as an emerging visionary in terms of all things AI. It's really the first time they've published that particular grid, and we're pretty excited about that designation. But we got to do it over and over again, and we're ready to do that.
You have, Joyce, the execution down. You have amazing experience at sales and supply chain orgs, massive businesses with Dell and with Cummins before that. But you've got to be able to deal with the capital side of the business too, right? So you need to know what shareholders are thinking and what they want. Or is that not, do you think it just comes if you continue to do your work?
No, of course. We are working really, really hard to build out our capabilities organically and inorganically as this market changes. I think AI presents enormous opportunities and, frankly, challenges. I think the traditional channel model doesn't survive an AI world where there's automated procurement and automated selling and all sorts of agents doing all kinds of work. And we are ready for that. We have been investing heavily in our own internal AI because if we're client zero for a bunch of our solutions that we've developed internally, we can also help our clients get those same results when we take them to them. And we've our number of AI assessments has more than quadrupled in Q2 from Q1. So we think this is really the catalyst that we've been excited about and preparing for many years. And now I think we're in a great position to deliver against those opportunities. But you gotta demonstrate results every single quarter, and I think that's what we're prepared to do.
How much of it though is that customers, and I think this came out in the reporting following your results, that customers are just putting off new projects and they're saving for what they think they might need in AI. How much of that is going on, I guess, and impacting your business?
Yeah, we have definitely seen that, specifically, Carol, in our enterprise infrastructure business. So our infrastructure business around enterprise, our largest customers. And there's a lot of excitement around AI. There's also a whole lot of uncertainty about how to proceed. So I think our customers are looking for those no regrets moves that they can make. How do they shore up their infrastructure, but maybe don't do the data migration work quite yet because they're not sure which workloads go where. We're definitely seeing that type of hesitancy, and that's a reflection of, I don't think we're an outlier on this, but that's a reflection a little bit of just changing spending patterns in those enterprise IT budgets and making sure that people are prepared and ready to spend on the things that are going to matter most in terms of their own AI implementations.
Is it because
the good news is,
yeah, oh no, please finish. Please, of course.
I was just going to say, the good news is whether they decide they need a much more robust network or they decide they want to run a whole bunch of these large language models and smaller language models at the edge, we can help them, or they're multi-cloud, we can help them. And that's the idea. How do we turn their concerns into shorter term, pragmatic projects, deliver results fast, and earn the right to do more?
How much of this I wanted to ask you, Joyce, is because they're smaller businesses or medium-sized business? And so I know that there's been this expectation that when it comes to AI of having on-premise facilities versus, processing when it comes to AI up in the cloud. So how much of it is it that those smaller and medium-sized businesses maybe want to have it on-premise, but they want to hold off?
Our commercial business has grown 5 years in a row. So that's that small and medium business space. We are really pleased with those results. And normally after we come out of a downturn, the commercial business grows first, and then we see that follow in the rest of the segments. And that follow-on work is just starting to take hold in our corporate segment, but the large enterprises are usually the last to grow as we come out of a down cycle. I do feel like there's a lot more discussion about which workloads should run on-prem, which workloads should run in public clouds, and we're ready for those discussions. And we help our clients optimize multi-cloud implementations every single day. So that's a huge opportunity for us.
I just noticed the statement that the enterprise tech buying model is broken, and I wonder how you think the new model looks.
Well, I think the new model is really around those pragmatic projects that are simplified and deliver results fast is sort of the norm. That's how we buy. We don't want a big engagement that spans 7 years. We don't want $100 million contracts around our technology services and solutions. We want smaller bite-sized chunks so we understand what the ROI is, and then we use the returns on that investment to pay for the next one and the next one and the next one. And that's how our customers are buying today. That is a pretty significant departure from kind of how customers bought technology support and services maybe 5 years ago.
All right, can I just ask you 10, 15 seconds, the pullback in spending, was it across industries or certain industries, just quickly?
Yeah, really, I would say it was more pronounced for large enterprise customers, more pronounced in those customers who serve consumers.
All right, gonna leave it there. Good to check in with you, Joyce Mullen. She's Inside Enterprises President and CEO. When we come back, our view from the C-suite continues this with a company whose share price was the best performing stock in the S&P last week. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got equities pushing higher, equities halting a 4-day slide. S&P 500 index right now up by 1.3%. Tech mega caps, which have borne the brunt of recent selling, leading today's bounce. Case in point, we do have NASDAQ up 1.8%. The Bloomberg Mag 7 index up 2%. The Dow up 520 right now. That is a gain of just about 1.2%. 10-year 4.20% with a 2-year 3.68%. Spot gold is up $12 the ounce, up 0.4%, $33.75. And West Texas Intermediate crude down 1.9%, $66.08 a barrel on WTI. Tesla has approved an interim stock award worth about $30 billion for CEO Elon Musk, a massive payout meant to keep the billionaire's attention on the automaker as a legal fight over a 2018 pay package drags on. Tesla shares right now, they're gaining gaining by 2.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really looking forward to this next guest. Generac, I don't know if you noticed, Matt, was the top performing stock in the S&P last week. It was up 25%.
And it makes a product that I think a lot of homeowners, if you don't have one already, you want your own generator. And I guess with these climate issues that we have, more and more people are pushed to buy one. Let's bring in the chairman, president, and CEO of Generac, Aaron Jagdfeld. He joins us after second quarter earnings. And I guess, power gen has never been as exciting. You must be the most popular person at a cocktail party now, because it's not just a generator that people want at home, but because of the data centers and AI, everyone is talking about generating power. How's it working on your company?
Yeah, thanks for having me on today, guys. It's like you said, it's never a dull moment when you talk about backup power. Every time I travel, I get on a plane, you sit down next to somebody, you do okay, what do you do? What's your job? Where do you work? I talk about Generac, and all of a sudden, people are like, well, that's a product we have to have. I think what we've come to find, just as Americans, we struggle with power quality in this country, and we have for many decades. This is not a new issue. I think what's worrisome is just the number of outages that are happening and how long they're lasting. And this is a growing problem, both for homeowners as well as businesses.
Yeah. So how much, Aaron, of your business is, me and Carol out in the suburbs, and how much of it is a company, mid-size or even larger, looking to back up its data?
Yeah, about 60% of what we do is in the residential market. So that would be, out in the suburbs, for homeowners who are looking for a solution for their family, for their property, protect those things. Businesses, this is a business decision, right? With homeowners, it's a little bit different. It's a little bit more emotional, right? Just the loss of power and what can happen in your home. Certainly there's things that can go wrong. There's damage that can happen to your house. But largely, that's an emotional decision. Whereas a business, the loss of revenue, spoilage of inventory, some kind of interruption of a critical process, especially as things get more critical with in business with power, the need for that. We see about 40% of our business leaning that way, but that is a very large opportunity for us. And in particular, in some of the bigger applications where we play up in the data center market, it's an incredibly hot space.
Well, dig into that for us, Aaron. Like, how much growth are you seeing in that space? How many calls are you getting about that? Give us an idea of some of the demand and what that kind of gives you an indication of how much more that market could be for you guys.
Yeah, the market for data centers, obviously you guys cover this,
massive.
Very broadly. Yeah, it's massive, right? The capital spending that is going into these facilities and all the equipment that goes alongside of them is enormous. And of course, the power needs themselves are enormous. But you can imagine the backup power, right? These are critical installations. If the facilities go down, we don't have access to the cloud. We don't have access to some of these critical things that are happening in data centers. So every single data center that goes in has emergency backup power. And so we're a relatively new entrant to this market. Our product lines have been smaller. We've served small business and smaller data centers for many, many years. The telecommunications space, and an example, is we provide backup power to a lot of the major wireless carriers out there. So this is a bit of a new space for us. We just entered it in April. We opened up our order book, and we've already booked $150 million worth of new business. We talked about that last week on our call. Mm-hmm. I think that was part of the reaction that you saw in the stock. But we're seeing just in incredible amount of demand for these types of products.
I'm always interested in where you're building these things. And I guess you have a new facility in Beaver Dam, Wisconsin, that's supposed to open up space to build those big diesel generators, more of the big diesel generators in Oshkosh. Tell us about your manufacturing footprint, because tariffs are obviously a huge issue these days.
Absolutely. And, we've been a longstanding U.S. manufacturer. We just opened our 6th facility in the state of Wisconsin. We have 7 here stateside. Those 6 facilities in Wisconsin, a good chunk of those facilities are focused on these larger units and on the commercial and industrial products. So those products for backing up businesses. But we're also a global company. We have facilities worldwide. We have a facility in China, a facility in India, Brazil. We have 3 facilities in Europe, and 2 in Italy, 1 in Spain. Have another facility down down in Mexico. So, we're a global company, but we see, the demand for backup power growing, really across the globe. But we see what's going on here in the U.S. The addition of the Beaver Dam facility was a critical part of expanding additional capacity for these systems because the growth is it's enormous right now.
How much? So I look at cars all the time. Ford builds more cars in America for sale in America than any other producer. You'd think that would help them avoid tariffs, but in the end, they get absolutely crushed with tariffs on steel, tariffs on aluminum, tariffs on foreign-made parts, tariffs on magnets out of China. And it really makes up then more of a tariff hit than somebody building a car in Japan or somebody building a car in South Korea for export. Do you get hit with those kind of nickel and dime tariffs too?
We do. We use a lot of steel. We use a lot of aluminum. We use a lot of copper in every single gen set. So, in fact, it's interesting you brought up the automotive industry, Matt, because it's a real good proxy for a lot of our input costs. In terms of the components, in terms of the commodities, the things that we're exposed to. So, we have a lot of those similar exposures, and I think just like Ford and others, we're trying to do what we can to minimize the impact of tariffs, but it's difficult. I mean, we've all developed over the last 40, 50, 60 years global supply chains, right? I mean, there are areas of the world where certain components, certain commodities are only available, right? They're just not widely available in other parts of the world. So it's going to take time to recalibrate those supply chains and to try and create a more domestic manufacturing base. And I get it. I understand the need to do that, in particular around things that are, associated with defense, maybe pharmaceuticals, things that are truly critical. I'm not sure, when you look at the broader base of things that we're putting tariffs on, that, like tennis shoes and Barbie dolls, if that's, maybe the right place to do it. I think we've got to be selective and we've got to be strategic in how we use tariffs. But I know the administration's, working through all of that with all these different trade partners.
Well, some things, like magnets or rare earths out of China, we're never producing those here. It's like not an option, not in decades. So
it's challenging.
And you must use those. Are you getting enough?
We are. We're fortunate that we have we have the ability to kind of substitute for some of those super rare earth elements that I think are really critical in aerospace and defense. Not as critical maybe in the automotive, and in smaller quantities they are, but we have access to them today. But of course that's a concern because, as you noted, there are only a few areas of the world where you can get those types of materials and those types of components. So it presents a really, this is a very complicated situation, very complicated conversation. I understand what we're trying to do, but again, I think we've got to be super strategic about how we implement these trade agreements and these tariffs.
We are talking with Aaron Jagdfeld. He is Chairman, President, and CEO of Generac. Hey, a couple of things that you said I want to follow up on. You are mostly selling here in the United States, but you did talk about what you guys are doing around the world, Aaron. Does it make sense to pivot even more so international with the energy storage solutions to places like Europe and China, given that the U.S. policies are now less friendly to something like solar?
Well, those are big markets to begin with, right? So, obviously we want to be successful with our energy products, the storage products, in particular, battery products. Europe is a very well-established market. The U.S., is a good market as well. But obviously the policy changes that we've now codified here recently are going to have an impact on the U.S. market for solar and for storage. Now, a lot of the things we're looking at, though, even with the loss of those incentives and the loss of support here in the U.S., the economics of putting a solar system on your rooftop, depending on where you live, as the cost of energy continues to rise, this is one of the things we've talked about. We started out talking today about the quality of power. The cost of power is another element here that needs to be talked about, because as power costs go up and the cost of these technologies around solar and storage continue to come down, the economics, the payback, the raw economics of investing in your own power production on your rooftop or a geothermal loop or however you want to produce your own power and store some of that power continue to improve. And the loss of support, it may impact the industry for a year or two, but it will get back on track because, again, power prices are going up.
Yeah, it does feel like we're headed towards a power war, certainly here in the United States, considering the amount of power needed to really support all the AI that's going on. Having said that, you talk about these loss of these residential tax credits. You've got some new home standby generators, my understanding, is coming to market. Is that going to help offset, though, some of the loss that you are seeing from those residential tax credits, especially when it comes to your energy storage business?
Yeah, absolutely. So on the energy storage side, the loss of the credits, that's going to impact that business here short term. Our home standby business, that business it's never benefited from tax credits to begin with. So, it's the kind of thing that if you and Matt out in the suburbs, you want one of these products to back up your home so that, you protect your property, protect your family. There unfortunately were no tax credits available, even though the administration, when President Trump was on the campaign trail, he had mentioned maybe perhaps offering a generator tax credit. We're still waiting on that. We think that'd be smart policy, but we haven't seen it yet. It certainly wasn't in the one big beautiful bill. But those products don't have tax credits. We do have a new product line coming out, which has got some great features and benefits packed in it. But those are the kinds of products that again, you're really buying and investing in those products to protect your home, to protect your family, to protect your business from a power outage.
No, and what I really meant is those new products kind of offsetting anything you're losing from the energy storage business because of the loss of the tax credits. One other thing I want to ask you about data centers. What about the imminent launch that you guys are expecting of large diesel generations for data centers? What can you tell us about capacity? How much do you guys have for that? And are you investing to boost that capacity? And what is the pipeline of new orders looking like?
Yeah, so the pipeline's very strong. Again, about 150 million already booked in backlog.
Okay.
In terms of capacity, just raw capacity here, kind of globally, about a $500 million capacity number for 2026. So if we get the orders, we think we can have a really great year next year as a way to increase our commercial and industrial business. But we're already thinking about 2027 beyond. This is a market that, again, you kind of have to go back to what do you see in terms of CapEx spending for data centers? Is this going to be is this truly a bubble? Something that in the next year or two you're going to see a retrenchment or a retracement of all of that spending, or is this secular? Right? Is this going to go on for the next decade? And we definitely, like others, believe that this is certainly a longer term trend and one worth leaning into. So we're already starting to think about adding capacity so that we can take that $500 million number to something much higher in the years ahead.
For me, it's the residential products, because this is like
Matt just wants a diesel generator,
it's like
Aaron.
a
I'm just going to lay it out for you.
Well, if you're,
what we do here is just
it.
what Matt needs to buy, and that's what this
is. Not even me, but if you're like a hedge fund guy and you just made your first, couple of million, and you're putting up a place in, Millbrook, so you can be next to Mashomic, you want to have a sweet diesel generator out back.
Well, I'll tell you, what people don't think about, right? Like if you think about your home today, and right, so you talk about that hedge fund manager or anybody else who's got a home, the amount of technology that's entered your own home, right? Think about it, like from security cameras to just from control of all of your, a lot of your audiovisual equipment, your lighting, but a lot of the safety equipment that goes in your homes, your security systems. These systems are non-operational when the power's out. We get notes from people who are like, look, I didn't even realize that my garage door wouldn't open. I've got a garage door opener, the power's out. I can't even back my car out of the garage. Everybody, if your power's out and you want to open the garage door, you got to reach up and grab that red handle, right? Nobody wants to do that ever in your garage because you don't know what's going to happen next, right? So people are like, I didn't think about it. I didn't think my sump pump.
Aaron,
what happens when your sump pump?
My husband keeps doing all these systems, like our lights. I have to turn on with like these technical systems and everything. Nothing switches or anything anymore, and it's like I fear for when the lights go out. I don't live in suburbia. I live just outside New York City, but we talk about a generator too.
There's so much.
We talk about a generator too.
It's not just even the food in your refrigerator, but the deer in the freezer downstairs. And
no, it's not.
What happens if you can't heat the pool in the fall? You need to have what is the hottest product, Aaron? What is the thing that the dude at the end of the cul-de-sac absolutely has to have? What are you selling out of?
Well, I'll tell you, it's our 26 kilowatt home standby generator, which can cover your entire house, a good-sized home for everything you need. Basically, if the utility goes down, you don't even notice that the utility is not present, right? I mean, you see a momentary loss of power, and then the generator starts up, and you can basically run indefinitely on a natural gas pipeline, or if you have propane at your home, you're going to be able to last a long time on a generator. And I think the other thing that we're seeing, huge trend, right, is people who have home medical equipment, GLP-1 drugs. GLP-1 drugs have to be refrigerated. Yep. So if you lose refrigeration with medications, certain kinds of medications spoil very quickly. And so, these trends trends, these overarching trends for, again, a lot of the medical infrastructure is starting to move into the home. We see Americans who are trying to stay independent and stay in their homes much, much longer. But a power outage, when you get older, in your 60s or 70s, and you lose power, it's a very different situation than if you're a younger American, 30s and 40s. It's the indoor camping. You get out the Monopoly, and everybody has fun, and it's great until, everybody gets sick of that after about an hour. But if you're older, the danger that comes from not being able to regulate temperature, the loss of some of the function of some of these medical devices, just not having the lights operate, as you mentioned, Carol. Those are very serious situations for older Americans, and that is a huge part of our demographic for home standby generators.
Yeah, it moves from being a discretionary to a staple.
Not to mention the wine cellar.
Matt, stop.
Okay.
Aaron, he's now Googling what you just suggested, and so, there might be a purchase coming or something in Matt's future. Aaron, thank you so much. Aaron Jagdfeld, he is Chairman, President, and CEO of Generac. Delighted to have him here on Bloomberg Businessweek Daily. I'm Carol Massar, along with Matt Miller. Let's take a look at some stocks on the move. With us is Bloomberg News equities reporter Alexandra Semenova. Alex, everyone is talking about your first stock.
Yeah, I love when things get silly in markets, and this is a really silly one, probably a sign that investors aren't really paying attention to fundamentals right now. American Eagle shares are up 24% right now. I'm seeing that's the most since the biggest intraday move since August 2000. This is after President Donald Trump came out in support of the controversial ad with Sydney Sweeney in it. He said in a social media post that American Eagle jeans are flying off of the shelves. The ad is the hottest one out there. He also told reporters that he was very happy that she's a Republican. It seemed like this was the first time that he was hearing about the ad.
So nothing fundamentally changed in the company.
I have to say, it's not the first time he's hearing about the ad, because I was listening to his press conference on Joint Base Andrews yesterday, and what happened is a reporter yelled out, "Did you know Sydney Sweeney is a registered Republican?" And he said, "I did not know that, but that makes me very happy, and now I love the ad."
Right, and now he's a big proponent of it.
He was undecided on the ad before, which I have to say I think is just a fantastic advertisement.
It is,
but there's some people who've been upset with it.
Yeah, they talk about genes in reference to genes as in like your DNA, and a lot of people have pushed back against that.
Sometimes a clever ad is just a clever ad, people.
Yeah, it's done well to bring attention to the company.
Also, look at the girl. She has great genes.
Okay, let's move on because we're running out of time. Joby, ticker JOBY, also soaring.
Yeah, so that stock right now is up a little over 20%. This is after it said it plans to buy the helicopter rideshare business of Blade Air Mobility. Blade is also up today, about 24%. The purchase is going to be $125 million in stocks or cash. This is as the electric aviation firm seeks to expand its battery-powered air taxis into ready-made market for its aircraft. The acquisition includes all of Blade's passenger business, including operations both in the U.S. and Europe. Its the CEO of Joby said, "With the quiet aircraft we're building, we see an explosion in the number of takeoff and landing locations."
All right, good stuff. We're going to have to leave it there. Alex, thank you as always. Stock Movers Podcast. They are 5-minute episodes. Biggest winners and losers in the market. Find it on Apple, Spotify, or anywhere you get your podcast. All right, that's going to do it with the first hour of Bloomberg Businessweek Daily. Coming up next, we're going to count you down to some earnings after the close. Also talk to the CFO of Wayfair.